The following is a presentation of TFNN. Live at TFNN, the Bull Bear Binary Option Hour. Brought to you by Nadex. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tom O'Brien and Darrell Martin.
Welcome, folks. Darrell Martin, Tom O'Brien. We appreciate you growling and prowling with us out here. Right now, you get the Dow Industrials down 75. NASDAQ is off, where is it? She's down 67. You get the S&Ps off 6. Gold is up $10, folks. Bottom line, dollar's topped, folks. We're going to have some fun trading this dollar because we hit this morning 92.76. You're at 92.45. This market can't stand a strong dollar, and I suspect not only that we're going to close here, but I want to show you something intraday. It looks to me like this baby has topped out. Bonds. They get the 10-year right now up 8 ticks, trading at 128.11. The 30-year is up 2 ticks at 146. Darrell Martin, what's going on?
How's it going, man?
It's going great. And folks, if you haven't test drove the Nadex platform yet, this is an awesome time to do it. We're going to be out here, and I'm going to have Darrell. We're going to be looking at this dollar euro, but I suspect you want to get ready for next week, folks. Anyway. Come over to our website at TFNN. As you're at the website at TFNN, what you're going to see is that you'll see the Nadex banner on the top, on the side. Hit that banner. You can bring up the account. They'll put $25,000 of paper money into it. And a bottom line, you'll be able to understand how these contracts move. So, Darrell, let's look. I want to show you everyone something out here, okay? And this is, you know, it's funny. Different times, folks, you have different convictions. This run on the dollar has been dynamite. The actual run that when you take a look at it is that we hit 92.74. You know, and if you bring this back, we put this back the continuous contract on a 10-year deal. What you're looking at is this: is that in 2005. That's the level we hit. There was a couple different levels. First off, there was the level in 2008, 9, and 10 that had swing points. Okay, and it took a long period of time. It stayed under the swing point. It had lighter volume. Trying to get it. Got it. Once it got it, it said, you know what? I don't want to stop there. I want to basically hit the swing point from 92.53, which is the swing in 2005. And there's an additional swing, by the way, at 92.50 in 2004. Bottom line, as it get up there, it finally hit it. Now, the world thinks the dollar is going to go to the moon, okay?
Right.
What you have is this. I want to show you something on this chart. And my conviction at this point, folks, is like about 9 million %. And this is why. I'm going to show you something, man. This is, when I see this phenomenon, when this happens, this is really, let me hit the right one. 1 second. There she is. I'm going to put this on a 10-minute first. So when I put it on a 10-minute, what you're going to see is this. Actually, I got to put it on a daily for you first. So I got to show you what actually happened here. I'm going to switch gears for a second. 1 second. Let me put this down for a second. I can show it a little bit better right here. Okay, so what you're going to see is this. DXH5. You're going to see what we did. Now, yesterday, what we did is this. We got up at 0720, and we hit 92.76. Now, we did that, folks, in only 212 contracts. That's it, okay? But that was the high of yesterday. So what you have there is this. You'd have operators pushing, you know, to see, okay, are there any more buy stops up there? What is above there? Are there stop buys? Okay, when people come into the markets, plenty of times that could be the buy. You get another breakout above it, they want to buy it, right? Okay, so check this out. What we did this morning, when the job numbers come out, right? It had monster volume, It did 5,500 contracts, and guess what? It couldn't get to that number. It missed it by 2 ticks. Now, a couple different things are happening here. It got to where it should get, but I've seen this phenomena before when the last thrust goes, and as that thrust comes in and it can't make a swing point, it's over. It's over, okay? So it's going to be wild watching this whole thing shake out. And in that context, of course, what I've brought into it, and I will continue to bring into it, but if you've been listening at all, you know that this gold contract won't stop. Gold right now, we're at the 12.19, up $10. You're going to see gold up $20 today. This thing's going to run. So it's going to be, so in that context, get a Nadex platform up, because what you're going to see is that inside the currency pairs, folks, you can really make some hay. And what we have seen this week, okay, if you're trading the Nadex product, what you have seen this week is that when the volatility, like the first day the volatility came in on the way down, the spreads opened dramatically. I mean, if you weren't in, if you weren't in a contract before that, you didn't want to be in a contract for 3 or 4 hours there. They calmed down the day after that. What you'll have inside these currencies is these currencies are going to be tight for quite a while because so many people are bullish the dollar. So it's going to be wild watching this whole baby shake out, Darrell.
But basically what we're looking at, to summarize, too, is like with the dollar index topping out, then looking at the dollar getting a little bit weaker at this point, that's going to be driving gold. Is that what you're saying?
That's going to be driving gold. That's going to drive the market down. It sets up great opportunities to basically go long the euro. I'll go short the dollar inside the Nadex platform. Do you know what I'm saying? Because
Exactly.
the risk versus the reward here is substantial. It's substantial, folks. And I'm sure you noticed it this week. I mean, on that first downdraft in the market, man, those market makers, they were scared to take either side of the bid for a couple hours. Do you know what I'm saying?
Oh yeah, they wired it up. They're just like,
yeah.
If you want it bad enough, we'll give it to you. But,
right,
yeah.
right. And I'm glad it got back into whack, okay? But
yeah.
So my point here is that if you're trading, and in the Nadex platform, folks, you can trade the indices, you can trade the commodities, you can trade the currencies. I would be going into the currencies for the next, who knows, 2, 3, 4 weeks, because I think there's going to be some real opportunities there inside those currencies because of the fact that if this dollar topped out, what happens, folks, in currencies in general, most of the time they're very longer-term moves. And the dollar, you can make the case that, well, the case flat out is that the dollar has only gone one way for 6 months. We just went from 80 to 92. You can make the longer case that the dollar has been going up since 2008. 2011. So if that's the case, we're in 2014 now. That'd be pretty cool. You know what I'm saying? It's like, okay, who knows? I don't know. Basically what's going to back this thing down. But it looks to me like that's it. And in particular, when you go over and we look at the gold contract, see, if we pull up gold right now, what happens in the gold contract is I can see gold itself, she's building cars, man. She's building cars to go up and basically get into this 1239 area. I think she's going to get it to 1223 today. Probably, we'll see what I don't think she's going to do it before we get off. But yeah, she could. See the 1223, all of that is the highs of the 6th, because it's a high volume high.
Right. Yeah, well, yeah. I mean, basically, it's just, and you're building all that, you're basing that on the high volume bar. I mean, that's it. So the magnet pricing level.
Yeah, that's right. But it's everything that I just put together there. Do you know what I mean?
Right, exactly. Yeah, I mean, the simplicity for somebody to see where the price is.
Yeah, no doubt.
The high volume magnet bar.
That's
basically where the target's coming from.
Suck it up, baby.
Now when it's going to come back and then pop back to that level is all the different pieces together. But knowing where it's going to go, the way to help somebody easily identify the chart is look at that high volume magnet bar that's coming across the screen.
Yes, absolutely. And what happens?
And it came down and fell too, like over here, like what you were just showing. That chart you had up earlier, it came down on high volume.
Yes.
But it's popped right back up, and that failure on that high volume on that drop, giving you basically the clue that it's looking to pop back up to that last high volume bar.
Exactly. And I absolutely, this is, what's really crazy, folks, is this. There are definitely nuances in the marketplace, okay? But the one that I showed you in the dollar is one of the, I would say, the larger nuances that you really want to pay attention to. And I've noticed this in equities, so picture something with an equity, folks. When you get an equity that's really running nice, really been running up nice, and it hit a high, and it was a low volume high, and it was extended, and then, pull back, and then it came up, and it couldn't take that out, and you had that burst of volume. It's like, oh man, there's a problem. There's a big problem, man. So.
Right.
And that's when I learned that the swing points are absolutely where the market talks, walks, and squawks, and it doesn't matter how big a number is at the swing point, which is crazy. I remember, when I was first looking at this, I said, this is crazy, man. Like you're stock at 100. It's like, well, if you miss it by 2 pennies, does that matter? And then I realized that, over the course of years, yeah, it matters, and it matters in a huge way. It's like, man, that's crazy. But, we'll see where it shakes out, But it's exciting. It's really exciting. I'm excited anyway. No, Darrell, what's so crazy is that these Nadex products are so dynamite, right? And I know the currencies are so dynamite. The currencies are amazing, folks, okay? Because what happens is that the movement in the currencies are phenomenal. And personally, I wouldn't want to just trade currencies because in all announcements, they go bonkers, okay? And you can be right on the move a million times and lose money. Inside the Nadex product, that isn't how it works. Inside the Nadex product, you've heard the ad a million times. You trade as you stop, which is just dynamite, man. It makes a huge difference. A huge difference, so.
Now, looking over at the currencies and the indices in this time of year, obviously we had some insane moves this week.
Right.
A lot of them were on lighter volume than we normally see.
Yeah.
When do we, when do we expect the sort of the volume to return back, the post-holiday, pre-holiday volume?
Well, that's where my point is Monday.
Right.
Yeah.
Okay, so Monday's where that's coming back around.
See, the dollar has been trying to get up to these highs for a long time, and you can. There's no doubt people can make the case and say this is nothing, because. I basically have a nerve saying that, the top is here, okay? There's no doubt about that.
Right.
But bottom line is that, we'll see where this shakes out. So you stay right there. Darrell Martin, Tom O'Brien, we appreciate you growling, prowling with us out here. Dow right now is down 72. Nasdaq's off 12. S&P's off 7.5. We're going to be right back.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Darrell Martin, Tom O'Brien. Appreciate you growling and prowling with us out here. And, you know, don't forget, folks, Darrell has an outstanding show right here at TFNN. Oh, he also has a great analyzer, okay? So let's take a look. Let's take a look at this analyzer, because what you have here, folks, is this, is that I'm over here inside the Nadex platform right now. And if you want to see, you know, I pulled out basically buying a euro. And if I bought right now, you could, I pulled out, Darrell, the one at 3, going to 3 p.m. And at that one, I just want to see if this is the best one of the analyzer he picks up. It may or may not be. But bottom line is that the risk there would be $20, and the reward could be $2.30, but that would be quite a way down. But this is what I'm looking at. And so that let's see, if I pull DX. See, this to me, this thing's going to fall apart today. This is going to be interesting how this shakes out. The index itself, now the euro is 60% of the index. So the index, we're at 92.32. 92.23, folks. It breaks 92.23, you're going to be down to right there. You'll be down to 92 in a heartbeat, and that's a big move. That would be pushing the dollar down 92. That's another 330. That'd be 600 ticks would be down. You know what I'm saying? You know, so if you take a look at that, what would, if I wanted to go long the euro, what would that analyzer, and this is where it comes down to, folks. There's a lot of contracts inside the Nadex platform, and what Darrell's analyzer does is scan those very quickly to let you know that what is the best risk versus the reward for the strategy that you're actually setting up, you know.
Well, we can go over here. We can check out the spreads.
Yes.
We got spreads. We got binaries. We got everything in between, right?
Right.
And so what I do is I'd go over, and we're looking at euro setups. We have long setups. We have short setups. And for looking at that euro for moving on back up.
Look at that. Oh, I like how you put those the expiration in there. Oh, that's pretty. Okay.
Makes it nice and easy to.
It does, yeah. And if you're in your car, folks, okay, you have to test drive this thing because that's nice what you did there, man. Yeah, that's about as clean as you can get. All right, cool.
So right there we have a 1 for 3 o'clock, 1.180 to 1.206.
That's the one I was looking at. Yeah,
it's a $20 risk for a $228 profit. I mean, that's about as good as you're gonna get. You know?
Okay, cool, man. That's the baby. Okay, so
and that's actually the best one. I mean, even compared to 11 and 12, it still is.
Right.
You know, yeah.
So that would now check out what you have here, folks. Okay, so you get a $20 risk. You can make 230. And what happens with the currency spreads, okay, is that you can't depend that that's what you're going to make, because that's a long way, okay? What you do have, though, and that's why I was bringing this up basically, right now, is that you will, if I'm right in the context that this dollar is topping out now, you're going to see very large moves at the front end of that. That's kind of just how when things change, folks, they change very rapidly. So bottom line, if you're live out there, that's the trade right now. If you're basically paper trading out there, that's the trade right now. That's a great risk versus reward because I suspect you're going to get it today. And you're going to know before Darrell and I actually get off the air. Because what you also have simultaneously, what we have going on right now is that simultaneously you have, now watch this. This is just lay them all together. Oh man. Telling you folks, don't sleep for the next 6 months here because this is going to be a trader's paradise. If we go take a look, let me just pull up ES. You pull up the E-mini, and you simultaneously look at that. What you're going to see is that the E-mini is breaking down too, and that's what you need. You want to correlate all these different deals because for some reason the market now cannot stand a weak dollar. Okay, it loves the strong dollar, and now guess what? Every time here goes the S&Ps. The S&Ps are croaking. So what you're going to see now? Okay, so we go over to the S&Ps. What is that number? That's 54. Oh yeah, see it? They're pushing, baby. They're pushing. Come to daddy. Here we go. This is crazy. The push here. We've already broken the swing, folks, and we're going to break it with volume. What do we got? You get 1 more minute. Yeah, you're going to break it. They're pushing this good. So let's see. You got 50. The high was 62. 47. Oh, this is going to be a big day, man. 47, 57, 62.
We'll see. And I got to bring something up right now. Okay.
Yeah.
Is that? All right, we'll be able to get back.
Darrell's going to bring it up as soon as we come back, folks. This is Darrell Martin, Tom O'Brien. Appreciate you growling and prowling with us out here. And the break, folks, if you haven't test drove the platform, Nadex platform, get over to our website at TFNN. Hit that Nadex button. They'll put $25,000 of paper money in your account right now. We're going to be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
How would you feel if you had a powerful decision-making tool that has the ability to find high-probability trading opportunities across multiple time frames in equities, currencies, and futures? Search no more. Take advantage of the best trade with the TAS Profile Scanner. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to help them make the best and most accurate decisions. Scan over 1,000 equities, currencies, and futures instruments for high-probability trading setups utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time, for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. Subscribers will also gain access to the December 9th workshop with John Logan. There's no obligation to pay anything. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Darrell Martin, Tom O'Brien. Appreciate you growling and prowling with us out here. Right now, you get the Dow down 162. Nasdaq's off 34. S&Ps are off 7. And dollar's croaking, folks. It's going to be interesting watching this whole thing shake out. She's down 417 ticks right now, and the euro is actually one tick over what the spread was when we were looking at that long euro position. So, Darrell, go ahead, brother.
Well, what I was bringing up was these 5-minute binaries that we've been talking about.
Yeah.
So, while we're talking, like, I mean, they just go so fast. You know, I mean, they're like lightning in speed. But I'm over here. I'm watching the 4 charts. I got EU, AU, you know, dollar yen, pound dollar. I'm down on 3 tick bar charts.
Yes.
And using my diagnostic bars there, and I mean, just like literally like in a minute, you know, going from 40 to 87.
Yes.
And we're dropping from 47 down to like $10. I mean, it's like seconds, minutes.
Right.
And I mean, you can even look at the live prices right now, and you'll see really quick, especially if you're watching them, just how much they will fluctuate, how much they'll drop. Like all these US yens, like they started like 10 and 50, and and now they're all like down all the way up in the 90s.
Right.
From the US yen popping up there. And so it's just a lot of fast movement. And I mean, and you're talking on ticks.
Lightning, right.
Like 2 or 3 ticks, the thing going from like $10 to, $50.
Yes.
And so it's just fun. You get into it. And at first, I was like, I don't know about this, but man, the more I get into them, they are awesome. I mean, instead of waiting for 20 ticks to get that, $20, you're literally on 1 or 2 ticks.
That's right.
You're making 20 ticks, so.
And what we're talking about, folks, is that they, and then on the Nadex platform right now, and what you'll see is that you'll basically go into these indices, you go into the binaries, and inside those binaries, you're going to see, at the very bottom of them, you'll see the 20-minute binaries, and then you're going to see the 5-minute binaries. And the bottom line is that what happens is that what I'd suggest is that if you trade these at swings, okay, you're going to be, your probability goes up dramatically. That's what this comes down to. And what you should be doing, let me just see something for a second. Okay. What you should be doing simultaneously is, oh, here we go, too, man. Oh, this is so sweet. This is all going, folks, okay? You got gold right now at 12.18. This wants to whack out this 12.23 area, man. It's going to go after it. It's like, what is hanging out here, man? It's blowing my mind. It's like, okay, something is hanging out here. And we'll find out.
It pops up and it's coming back down, popping up and coming back down.
You know what I love? This happened yesterday. What I absolutely love, folks, okay? And I've been trading these gold stocks long enough. What I saw yesterday, I just loved. And what it was is that at the end of the day, right, they were whacking every single gold stock. It's like, oh, thank you, God, okay? Because that, to me, that's accumulation in a huge way because it was too whacked out. Do you know what I mean? It's like, oh, really? And then, of course, they were whacking even Rheingold, and Rheingold's up another 276. When you get fast movements inside the gold market, that's exactly what happens. It tries to go, doesn't go, and then right before it goes, guess what happens? They keep hitting it, and they discourage people. Because, see, the gold market is so small, folks, it's very easy to do. At one point, and I know a lot of the Tigers know that, at one point, this is crazy, at one point on one expiration, I personally had probably 70% of the float on Harmony Gold. And the way I did it, and that's crazy. That makes no sense whatsoever. But what happened, guess what? What happened is that, and this was in 2004 or 2005, and what I did it through the option market, and then you know what I did? And I had someone else on the other side of me, and who knows, this operator, I toasted him that one particular day for sure. Because what I did is this. I did the accumulation, and then on option expiration day, what I did simultaneously is that I came in again, and then I turned around and I bought about 100,000 shares. And as soon as I did that, right, he had a cover, right, and it was hilarious. It went up, but when it went up, I already had my sellout on the other side, and so I gave it to him on the other side too. It was, and folks, you can't do that anymore, okay? Listen, it doesn't mean
when you find the opportunity, take advantage of it.
Yeah, exactly. And, as one of the Tigers said yesterday, so check this out. Yesterday I was watching Harmony, and Harmony came off the bottom really nice. Harmony just went from 167 to 254. And actually yesterday, this is a heads up, folks. Here, let me show you something. When I was watching, and folks that trade gold know this, okay? What happens is that you can hit the gold stocks, and these operators hit these small gold stocks, and they hit them pretty hard. And when I was watching Harmony yesterday, I said, oh, it's interesting. They didn't hit Harmony because Harmony is off their radar. That's how I got it. That's how I got away with this the first time anyway. What's always on their radar is all the small stocks up in Canada. That's kind of how this shakes out. And one of the reasons is that in South Africa itself, the South African exchange, that is very liquid, okay? So they stay away from that, okay? But it's intriguing, man. It's just, the whole thing is intriguing, And we'll see where it goes. But I can tell you, I haven't been this bullish in gold for a while. I just haven't. And I think it's here in spades. What I just don't know is that, like, okay, what's the catalyst, man? Do you know what I mean? What's the catalyst here? Because what we had in 2002, I just felt like it was cheap. You know what I'm saying? And I think after that, what it really gave us, though, is that it gave us that gold was showing that what was going to happen in 2007. It was that far ahead of it. You know what I mean? It was sniffing something out. This time, I can't figure it out. I'm suspecting that it's going to be inflation. That's where I'm going here. But hey, we'll find out.
Inflation.
Yeah. Yeah. And it won't be next year.
QE 15.
I think it's already happening in food, Darrell. I mean, you know, it's blowing my mind. I mean, it's blowing my mind every single time that I'm going to the grocery store right now. And I'm talking dramatic. It's like, you can't go to the grocery store without spending $120. It's like, that's crazy, man.
Right.
You know, and, you know, so it's like, okay.
But at least you saved like $20 on getting there in gas.
No doubt, man. no doubt. But that's pretty heavy, man. You know, and you know, it's like, okay, how long is that going to keep going on? This S&P, man, they're whacking this thing good, folks.
I know it is. It's getting nailed.
It's getting nasty. It's a beautiful thing.
I mean, yesterday I couldn't believe, man, it's just flying up too, and then now we're flying right on back down. So there's no report this morning at all.
Right, and that's exactly. Our monster bond trader over here wants to go look at bonds, and there's no doubt. So the bond genie, folks, okay, is not only still out here in an extraordinary way. These bonds want to do an ABC structure on the way up. It's going to be a mind blower, man. And watch this. In fact, I got the 30-year up right now, okay? And this thing, the October 15th high is 146.16. We got over that. It has juice under this move, which is just a mind blower in itself. Now what it's done is set up another. So check this out. It has a small ABC inside a larger ABC, okay? It's like, wow. Okay, so the larger ABC is 134 up to 146. You get $12. So that's saying that the bonds that want to go to 150. Well, the 153, I think, is the high. So if the A to B equals C to D on a 1-to-1 structure is 150, that's almost a no-brainer that way going to 153. So we'll see when we get up there. Now that's the larger deal. I can make a case that the larger deal. So check this out. This would be really sick. The larger deal, you can make a case. I'm going to put this on a quarterly for a second. If I put this on a quarterly, you're going to see the larger deal would be like, are we really going to do a 53, 63? Are we going to go to 73, 83? Are we going to go to 190? Who knows? But the larger deal, if we take out
190 would be insane.
If we take out 153.11, that would be a much larger deal because that would be that's a 14-year A to B. You know, but bottom line, hey, listen, we're going to have a decent understanding of it when we get up at this 153. If we get into this 153 with volume, it's like, oh man, you got to be kidding me, man. That basically would be on the table, which would be a total mind blow. You know, we'll see where that shakes. But hey, the way I'm looking at this, I heard someone today on TV, folks. This was a mind blower. They were on TV, first off, saying that they thought rates were going to go up. And simultaneously, they were saying that, oh, all foreigners are going to keep buying our bonds. And I'm saying to myself, hold it, there's a disconnect here. If you think the rates are going up, folks, and you think foreigners are going to keep buying our bonds, which they are, by the way, no, that means rates are going to go down because there's not enough supply of our bonds in the marketplace right now. Yes, okay? You know, and if you go back and listen to people, 10 years ago, they thought that, okay, our deficit was going to kill everything. Right, get it straight, folks, okay? The further the rates go down, the less the deficit even matters, okay? Because the Treasury's making money hand over fist, So it's going to be wild. And here goes the dollar. Dollar just croaked. It's a beautiful thing, man. This is blowing my mind. I am not going to be sleeping. That's it. Sleep is called off for the next year. Okay, so here we go. Maybe even 6 months. So you had the swing point out here of the 92.22. You just blew it away. Your next swing point is going to be easy to take out. Your next swing point is just 92 flat, 92.000. They'll get this thing going, man. And if we go over to the euro, we take a look at that euro that we were looking at there. You get the euro right now at 1.1833, which is a beautiful thing because even with that spread, that euro is 1.829, and now it's 1.841. Sweet little deal, no doubt, man.
It's a sweet little deal. It's a nice thing.
It's, and we'll see how this move comes in. Let's see. What do we have? We have, it's 10:45. You still got plenty of time for that gold to pop. Let me see what they're doing with that gold. So, we're getting there. Okay, we get 97,000 contracts. We just took out the highs of yesterday. You're at the highs of Tuesday. What day is today? Friday. So you're at the high Tuesday, Wednesday. No, you're at the highs of Wednesday. And the highs of Thursday, we need $3 more. Let me just see this intraday. Okay, so she's building a little cause. She's going to need more juice. She's going to need more juice. She doesn't have enough juice yet. Well, so what you want to see, when you don't have enough juice, folks, whether it's going up or down, you do want to build cause. You don't want to. I don't want this baby to go up there just yet. You know.
Okay, so just as a review, because some of our listeners are new, what would you say? Like, how is the easiest way to define building cause?
Building cause means that you would lay right underneath either a high or low, right? And then you're going sideways. And as you're going sideways, if you're building cause to go up, right? Let's talk the gold contract specifically. It means that every time you back down, you're going to be backing down with lighter volume. As you start moving up a little, the volume expands slightly. And then you get a sideways move. And in this case, I like to see, in this case, you get a sideways move. We get a sideways move like 20, 30 minutes. It would be beautiful with the aspect that you, as I said, you're coming down with lighter volume, you're going up with volume. Now, that's on the way up. Now, watch on the way down. I'll go over to the S&Ps, and we just look at the S&Ps right now.
Right.
If we take a look at the S&Ps, what you're going to see is just the opposite. Watch this. So, well, the S&Ps croaked with volume. This is even better. So the S&Ps, now they're going to be, we're at 2039. At 2033, they can get down at 2033 pretty quickly. Down at 33, they're going to have to build cause to basically break down. But we just, that was a fast move. We just went.
So by building cause, is another way? Like basically, it's bouncing off of a level over and over again with a lighter volume, and then eventually.
And what happens is that the way you see it, like so in the S&Ps, for the S&Ps to go lower now, right? What you'd be looking for is this. Is that and I'm using 10-minute bars. So on the bar, you bounce up, and you bounce up with lighter volume. Then you come back down, all right? And you don't have to hit the lows, but you come back down, and volume expands slightly. You go back up, it contracts. You go back down, it expands. You go back up, it contracts. You go back down, it expands. Let's say that's a half hour. Let's say that's 3 10-minute bars you're dealing with, folks. Let's say it's 6. Let's say it's an hour. You get that phenomena going on, it's just a matter of when that comes back down and then it blows out, And because that's what we did. In fact, you can see it before we got croaked at 10:20. Those 3 bars, that's what it was doing. We first come down on the S&Ps, and you came down with 103,000 contracts. That was at 9:30. You bounced with 68,000. You bounced with 51,000. You got to a slightly higher high with 45, and then don't want to be you came down with the 56. You stay right there, folks. Darrell and I are coming right back. Dow right now is down $1.55. You got the, and here goes the euro, man. And hey, the dollar's toast. Get the cream cheese out, folks. Get the cream cheese, get the peanut butter, get the jelly, get it all. Toast them up. We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow Industrials right now are down $1.30. You got the Nasdaq off 28. S&Ps are down 13.5. And if we take a look at the volume out here, what you have, you're at 170. So that is light volume on the NYSE as we stand. On the Nasdaq, however, it's not. And Nasdaq is pushing 500 million already. So there's some action on the Nasdaq. If we take a look at the SPY. Oh, interesting. Oh, I like it. You went to a higher high. Ooh, that's good. Okay, so the SPY is done 46 million thus far. Giving it up there. The NASDAQ, the Q's of 15 million. And giving it up there, too. It's going to be interesting watching this whole thing shake out. Let's go to Mike in Thailand. Hey, Mike, what's going on?
Tom, how you doing? Thanks for taking my call.
Absolutely, man. So you want to look at the euro on a quarterly, right?
Yeah. Now, also, before we get to that, can I ask you just a real quick question? Out of the IWM, the 3Qs and the SPY, what do you like? What do you like to go short on?
The IWM is the weakest right now.
Yeah, but that all right. So what would you go short on? That doesn't necessarily mean just because of the weakest. That doesn't necessarily mean you like that, does it?
Oh, I do. Yeah, and I'm short the Russell right now. Yeah.
Yeah, all right. I'm just getting ready to put in an order to go to do that. But they took me out yesterday. You know, I did some traveling. I got some disoriented. I had some business to do. You know, up in Bangkok, and I got all screwed up with, you know, because I work at this stuff all day, and you know, they got me yesterday. They chased me out. I covered yesterday.
Yeah.
Should have held on. I'm like, don't tell me these, you know, these nutters are going to send this market up to new all-time highs. You follow what I'm saying? Go ahead.
No, listen, man. You know what happens is that there's no doubt the bounces that you're gonna have, folks, are gonna be a bear market sees the fastest and most vicious bounces that there are. So you need fast fingers, and you always, you know, that's how bear market bounces come in, man. So.
Yeah, well, fast fingers didn't do it for me. It's a long story, anyway. All right, now back to yesterday. I don't know if you heard or not, but I called in this. No, I didn't call in, but I was chatting with Steve Rhodes yesterday.
Okay.
And it looked, I don't know if you were watching this or not, but he put up the euro and both the dollar on a quarterly, you know, in separate, you know, in each separate instance is the chart.
Yep.
Going all the way back to 2005 that showed a beautiful top in the dollar testing. So you have massive overhead resistance. And then it was beautiful support on the euro. You know what I'm talking about? In 2005. And they were both the same month. It was October 2005.
Well, that makes sense. No, I know. That's yeah, because that's the pair you're talking about, and that's the euro is 60% of the index itself.
Yeah, that's exactly right. So now I mean, you see my point, but you know, I mean, everybody has their different. You know, analyses
sure.
For a reason,
right.
And I couldn't understand why Steve couldn't see the reversal yesterday, and I was saying, you know, this dollar's got to reverse. This dollar's got to reverse. Well, hopefully, you know, I just took a short in the SPYs and the 3Qs.
If you didn't hear it, okay. So let's talk about this for a second, because see what? Well, we'll talk about it this afternoon. Hey, Darrell, thank you so much, man. You have a great one and a safe one. Of course, we look forward to the program a little bit later.
All right, man. See you then.
Have a great one, folks. You stay right there, man. Mr. Basil Chapman's going to be coming up next with you, growling and prowling. Thanks, Mike. Appreciate it. And then, of course, Nico and Paige, Dave White, and we'll be back here this afternoon, folks. Stay right there. Got our man Basil Chapman coming up next.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.